We see food e-commerce as a great source of growth for Casino in the coming years. We have a structural advantage, which is our exclusive partnership with Ocado in France. And as you know, Ocado is the best technological platform. So our target is to grow in the coming years with the first Ocado warehouse that will open next year with Monoprix, beginning of 2020. And I think we'll see very dynamic e-commerce growth on that front. We also have this exclusive partnership with Amazon that we recently extended and which also helps us grow in that segment. So for us, very clearly, food e-commerce is an opportunity.
David, what would you say about the tone of investors? Because there's been extremely messy news flow around your parent company and some of the debt problems that they face. Do you think some of your initiatives that we've just been talking around e-commerce have been almost derailed to an extent? Some of that positive energy has been really detracted by the issues with your parent company?
You have to separate things very clearly here. Our strategy is focused on the development of our strength, which is the premium and proximity format, the best categories in the best regions. We are focused in 3 regions, as you know, which are the most dynamic in France. We have our new activities, such as the energy and e-commerce business and the data monetization. And Casino strategy is based on its own interest and the best valuation that we can get for our activities. So I think our parent company, of course, will benefit from the continued improvement of our operation and our deleveraging. But to be very clear, all the decisions we take are taken in the interest of Casino.
I want to just focus in on France. Faster same-store growth in the second quarter, 0.7%. Interesting backdrop when you've had yellow vest protests that have started to disappear to an extent, but hugely disruptive for the retail market a few months ago. And you've got an economy that is part of Western Europe where there's been a few challenges. What's the backdrop? How healthy would you say the French consumer is at this point?
The Yellow Vest movement, as you know, had a very strong impact at the end of last year in France. We still had some impact in Q1 and around the beginning of middle of Q2, especially in Paris. So that had some impact. But now that this movement seems to be waning off on our banners in any case, we see the trends going back to normal. So I'd say in France, you have to look, it's a very polarized market. You have regions and places where the growth is very strong and the revenues are growing a lot. Demographics, economics is dynamic. And you have other regions which are not growing as well. And our strategy now is to build on our strength, which is growing in the places where we see a lot of potential, which is basically on the Paris region, around Lyon, from Lyon to Switzerland, and on the French Riviera. These are regions which are very dynamic, and we're selling stores in other places, basically.